Hello. He might not be interested in being in this chat because this chat is about insurance. But all is welcome. All is welcome. All is welcome. Hello, hello. Thank you. I appreciate um, today's conversation, creating generational wealth. Give me 1 second, guys. Hello, hello, hello. Thank you so much for joining me today. I am going to be talking about creating generational wealth for our children. I asked the other day if you guys were interested in um, creating generational wealth for $25 a month for our children. Give me 1 second because you know your girl can't see real good, so hold tight. Bear with me 1 moment. I gotta log back into my program so that I can show y'all what I'm talking about. Okay. Just about there. I had all of this set up since 1 o'clock, but it logged me out. So it is what it is. This allows me a little bit of time for people to join. Since I sent the link out a little late, I sent it to people individually. And all right, so now that I have that set up, I will share it with y'all in just a few minutes. But let me tell you what all of this is about today. Today's conversation is about setting up generational wealth for your children. So my goal and intentions is to show you how to invest $25 a month into a child age 14 and younger. A child age 15 and older, you need to at least do $50 per kid. I'm going to show you what investing into a child, you guys give me a child. What age child you want to start with? Give me an age. Give me a date of birth. Somebody type a date of birth in the chat. Type a date of birth in the chat, and we're going to start there. All right, so December 26th. Can y'all see my screen? December 20, 2013. Tracy, where you put that, Tracy, got me a little confused. So we're gonna do one at a time. So December, what year? I need the month, date, and the year. So we're gonna start with Tracy's, and then I'm gonna get to Danila, and then I'm gonna get to Smokey Bear. And I'm sorry, Felicia, Danila, and Smokey Bear. 2012. Okay. So give me 1 second. And I know y'all see me. I haven't shared my screen yet because I had to enter my password again. So bear with me. And it's a male, right? All right. Perfect. All right, I got it, y'all. Hold tight. Here we go. It'd be hard work. So give me 1 second. Y'all know I ain't good with this YouTube stuff. Add it to the stage. Y'all got it? And we got it. We got it. All right, so starting a new case. I'm just going to put in Tracy's first name right here. And don't be looking at my fat rolls because I just had one. Tracy, what state are you in? What state are you in, Tracy? All right, 2015. The child will be turning 10. Yeah, I'm going to zoom in. Give me 1 second. Can you see it better? Miami, Florida. Hold on, guys. Now, I just did 5 of these right before y'all called because I had to do somebody. Let me see. Calculate results. All right, perfect. Y'all can see this now? Can y'all see that? Big and is that big enough for you to be able to see? All right, perfect. Okay. So now I know y'all can see it. Let me jump over back to it so y'all I can go up and down. All right. So do you see how? Hold on. Your girl did that wrong. It's me trying to do it on this computer while y'all sitting here. If I had it on my laptop, you would be able to see. Hold on 1 second, y'all. We got to pause this. We got to pause that. Y'all got to hold tight. Let me stop sharing my screen. Give me 1 second. Wait, I zoomed in too. Hold tight. Don't move. So what I'm gonna do is I'm gonna turn my camera off so that I can get closer to this screen because I can't see. Okay, y'all. Because I don't know what the hell man got going on. But anyway, how y'all doing today? Let me just tell y'all I said hello, and I be thinking about y'all all the time while I'm doing this. I'm getting ready to show y'all how when I do everything that I need to do, how it work out. Okay, so this is the first part that I want to show y'all. This is what 25 hours a month will get you for somebody born in 2012. So the annualized premium is how much you pay for the year, $300. The target premium is $174. It's $25 a month. The minimum premium is $87. The single guideline premium is $7,521. That's how much that will be paid into this premium. And then the 7 pay is what you can dump into this account whenever you feel like it to make it make sense for your child. Okay? So you can dump that in there. It's all tax free. So let's look at the illustrations again. This is with the income option. This product is called Path Setter. And of course, we're going to do, if I sit down with you, I'm going to do an individual one with each person, but I want to show y'all what it basically looks like, okay? So the face amount, you can see it here, $50,000. Can y'all see that? Don't worry about the comments. You gotta worry. You gotta worry about me. Don't worry about the comments because we ain't gonna ever be able to get what we need to do. Worried about the comments. Can you see that it say $50,000? Can I get a yes? Can I get a no? What do I see? What do we got? Can I see that? Can you see that it says $50,000? Hello? No, maybe so. What we got going on? Okay. I'm getting ready to circle the $50,000 right here at the top. Do you see that? Face amount, $50,000. So for $25 a month, you get $50,000 worth of life insurance. Plus, this is what you get down here. Y'all ready? Here we go. In 5 years, the death benefit will have increased, guaranteed to by $355. The current rate, it would increase by $728. That's what we are. And as you can see, 10 years and then 20 years, moving on down. You know what? I got a better solution. Hold tight. Let me do it this way. Hold tight. I got a better solution. Let me get rid of this. Let me remove that. Hold on. I got something better for y'all. Hold on. Let me remove that completely and totally. Oh, look at me with all my little gossip I just be putting in there. That was about to show y'all some stuff the Carlissa just did. Woo, honey, that wasn't going to be cool. Hold on one second. Hold on, y'all. Don't be looking at my booty. Don't be looking at my booty. Y'all, I don't like this new setup, but I'm working with it the best that I can. Oh, good. Y'all weren't supposed to see my booty anyway. Y'all weren't supposed to see my booty anyway. God dog it. It's the ghetto for me. Don't judge me. I'm learning. Can y'all see it now? Can y'all see it now? And y'all, I know y'all can see me now because I can see me now. Can y'all see what's on my screen? Perfect. Perfect, perfect, perfect. All right, let's get into this. I'll turn my camera back off because I gotta walk up and y'all about to see me standing right here front and center. Is it still blurry or are you able to see it? Because I'm gonna make it big so I can see it because I'm an old lady. Are y'all able to see it or is it still blurry? Because I'm about to make it big for me because I'm an old lady. All right, speak now, forever hold your peace. Okay, so we're gonna go back to the original slide, right? To the first one. All right, so right here at the very top in the far right hand corner, it tells y'all the face amount is $50,000. It tells you the initial premium is $25. It's for a 9-year-old male in the state of Florida, non-tobacco user. Okay? So, all right. So I don't have this set up to pass out any withdrawals or loans. See this section here? It all says 0. So that's not set up to do any withdrawals or loans. If you look over to the far right, the death benefit is still $50,127 when he turns age 10. So it has already increased by $127 by the age of 10. If you look over here where it says planned premium outlay, it's still $300 annually. It tells you each year how much they have saved. So by the age 39, this benefit will have increased to $62,973. Okay? But your payment, you notice, has not increased. At age 66, because I only set it up at age 66 and I only set it up for $25 a month, you notice that it has not stopped being $25 a month. At age 66, he'll automatically get $9,100 a year. And then let's look over. Do you see what the death benefit is at this point? $138,895 is the non-guaranteed with the current interest rate of 6.14. Now, if the interest rate goes back down to the 4.75, it would only be worth $100,048. But still, you have only paid at this point in time $16,000, and you started out with $50,000. Y'all following me? So look at the age, 65. He's been paying for it for 57 years. It's $9,100 that will be given to him every year starting at age 65. All the way until age 89. Now, if he decides to take it all the way to age 89, to take these payments, you do notice that all of this has started decreasing. But you see the death benefit all the way up until age 82 is still $50,000. It doesn't start decreasing until age 83. But if he lives to age 99, it will go back up to 108,000. But do you see what the account value is at that point? . So this is what I mean by setting up a savings account. It was still a little blurry. Okay, so I'm going to tell y'all what I'm going to do. I'm going to pull each one of y'all to the stage, and I'm going to do an illustration for everybody that wants to, that everybody that is subscribed. I'm going to pull you to the stage. You can keep your camera off, but I'm going to get your information from you, and I'm going to do an illustration, and I'm going to send it to your email. How does that sound? How does that sound? So I'm going to start with Tracy. Tracy, do me a favor. I'm going to remove this. And I'm going to invite you to the stage. You can cut your camera off if you would like, okay? So we don't have to see you if you don't want us to. I should have did this on Zoom since there's only 10 of us. I should have did it on Zoom. You not ready? All right, well, whoever is ready, go ahead and click the link. Hey, Uniquely. Hey, Danny. Hey, she got to be more careful. Who else I see in here? Hey, Danella R. Smokey the Bear. I need to learn about that name. I need to know about that name, Smokey the Bear. So I dropped the link. If you want to jump in, go ahead and jump in so that I can give you a more personalized thing. If not, you can always hit me up on Instagram in my inbox, and we can FaceTime on Instagram, and we can do it that way. Since this is not working out, it's being blurry, but it's not supposed to be that way. It's supposed to be able, where y'all supposed to be able to see it. But I'm trying to figure out why, why. Okay, Tracy, you just inbox me. Inbox me and let me know. You can actually inbox me their names and their birthdays, and I can set the illustration up and send it to you. And then you inbox me how much you want to invest in them to make it make sense. Y'all want to play with another number before we go, or do y'all want me to end this and go on Instagram? Who is Manson? Who is Manson? Am I missing something? Why can't I see that? Who is Manson, Danny? My stuff is it's like super good. Okay, send it to my email. Send it to my Instagram. Or do you want me to drop? I'm gonna drop my email in here. Danny, bring your butt up here. I dropped the link. Okay, Smokey the Bear, I appreciate it. I'll give you the illustrations, but I just really wanted to show y'all what $25 would do. $25 a month to get him $9,100 a year is not a lot of money, but the more you put in, the more you get out. Okay, the more you put in, the more you get out. Hey, Danny girl.
Hey girl, hey. Hello everybody.
So what I'm getting ready to do,
Ooh,
Danny,
wait,
is
wait, 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 wait. 1 minute. I did something. Okay.
what I'm getting ready to do is I'm gonna exit out of the computer part of the program, and
Mm-hmm.
I'm gonna do it from my tablet, so that
Okay.
um
Oh, that
so
body
I don't have to be
bodying.
standing up, and I can get all the information. But I really need to what you been up to, Danny girl?
Nothing. Laid back Saturday. Saturday, right? Yeah, Saturday.
I know I've been working since I woke up this morning, and I'm like exhausted. But
It's
I
been
have been
raining
working.
on and off all day. All night, really.
Huh?
It's been raining on and off all night.
Oh, you know what? I think is wrong. Y'all, I'm so slow.
What you
Maine used to
do?
be over here doing it. Y'all seen my body?
I said your body bodying.
Thank you. I'm over here. Hold on 1 second. I'm over here. Then got. I done put on little bit of weight, a little bit of weight. I'm telling you right now, my little gut been popping out.
Oh, yummy bowl.
I know what it is, y'all. The reason why I'm having a hard time hearing y'all is because the sound is coming out of my computer instead of out of my
Out of the screen, the window. I mean the
yeah,
TV screen.
yeah, and it should not be. And I don't know how to fix it.
Got the mansion
Got
back
the
there. Okay, it's louder though.
Yeah. Now you can hear yourself. All right. Thank you. That be me in the gym. I gotta get a couple more things together like this right here. Them arms,
That's
baby,
fine
them
for
arms.
50. For 50, that's fine.
No, I gotta get them together for me, not for nobody else. You know, when
No,
you
no, I'm
feel
just
like,
saying in general.
oh, right, in general. Hold on. I'm telling you, Danny, I've been working since I opened my eyes this morning, like at 8 o'clock. Like I had a client call me and wake me up out of my sleep at 8 o'clock this morning, and I just was like over it because I was over it because
Since
they
8?
needed
Jeez.
since 8 a.m. It was a Medicare client. I had some drama going on with the Medicare, and they needed me to fix it. And I put a complaint in on their behalf, and
Mm-hmm.
so Medicare called this morning at 8 o'clock, and I had to work that shit out at 8 o'clock this morning, and I was just like, I've never been so tired. But it is what it is. I don't mind doing what I do. Um, I actually love what I'm doing. All right, so give me your state.
New Jersey. What are you looking for?
And how old is the child?
13.
Okay, give me the date of birth.
12. Oh, that's my oldest. 2312. February 3rd, 2012.
And of course, we're gonna and then tell me his first name.
Hassan, Hasaan.
Ooh, I like that. And of course, if we actually do it, we're gonna have to put the information in there the legal way. But
Mm-hmm.
and then how much? What's a comfortable amount for you to spend every month?
Like $30 because I would do two because I have two under 18. So I have a 2-year-old and a 13-year-old, and then I have a 19-year-old.
Okay, perfect. I did one for Keelan when he was 14, and
Mm-hmm.
they just sent me his now mind you only had it 2 years. If I want to sell his policy right now because of the way what I do is I watch the market, and then they also send me updates because I'm a
Mm-hmm.
broker. So what I do for my people, my son and my kids, what I do for them is I let them know, hey, I just switched my stock to this. I just switched mine to that. When
Okay.
they're fluctuating, growing, or if it's not moving, I'll move
Mm-hmm.
it to whatever is doing better.
Mm-hmm.
And when I move it to whatever is doing better, I moved it in February. In 1 month, it gained almost 5 grand.
Mm.
Yeah. All right. So I'm going to save this.
Well, man, at work.
I don't
Oh
know.
no,
He
it's
just
three
ain't been
o'clock
over
there.
today. He just ain't been over today. Yeah, he just ain't been over today. I love iPads.
No.
Okay, so hold on. Now I'm gonna pull you back up, and I'm gonna share this to the screen. Thank you, Miss Tracy. I had just got something. All right, can you see my screen, Danny?
Yeah.
Is it big enough? Is it blurry?
No.
Okay. All right, perfect. All right, so I'm gonna jump slides. You see in the top right hand corner says $50,000 is the death amount, the death amount. So that's the guaranteed life insurance policy that you're paying for. Because remember, I said that this is a life insurance policy as well as a saving account. Okay.
Okay.
So all right. So getting down to the page here where it states that the plan premium for age 14 is the first year that he's going to pay you're going to pay $360 for the year, for the entire year. Okay.
Okay.
You notice where it says the withdrawal loans is going to be $0. So that's how much you're able to withdraw from this policy, because I set it up to be able to be, Social Security may not be around. Okay.
Okay.
Let's say he has a pension from his job, and his pension from his job is only giving him $2,000 a month. Okay, so we're gonna take the $9,000. Well, I don't know if yours is not, because we did a little bit more. At 8, well, it's a little bit less because he's starting at an older age than the other young man. So $8,080 divided by 12 is $673 a month of extra income that he would get for the year by you just paying $30 a month for your son. So he can add that to his pension, to his Social Security disability if it's still around, to, let's say he want to be a teacher, or let's say he invests in some annuities later on. This is tax-free income that you have just set him up with to put in his pocket every month, because he's going to get $8,080 a year.
Okay.
So he can have them pay it all out one time for the year, or he can have them give it to him monthly. It's his choice.
Okay.
But that's what it's set up to pay out. Okay. So let me go back down. Let me go back up a little bit more, because I want to look at something else to show you. So let's say at age 45, he decides, I don't want to wait to 65 to get $8,000 a month, because I'm buying a house right now. I just got married. I'm buying a house right now, and I need some money for the down payment on my house. And I currently have a whole life policy that I've been paying for on my own since I've been an adult.
Okay.
But my mom set me up with this policy later on, earlier on in life. I could go back in there at the age 45, which is right here. Now, he could surrender the value of the policy for the guarantee. Now, this is if the market does nothing, and it's just at 20.25. Market hasn't been doing anything. It's just at 0.25. This is what he's guaranteed to get. Understand? They will give him $1,795. But if the market is still doing what it's currently doing right now, which is 6.57, he could surrender this policy and get $19,724.
Okay.
So you understand the whole process in it. It's like, yeah, you're not watching your money grow. It's just going. You know what the guaranteed amount is, but you also know what the non-guaranteed assumption is, which is like the alternative, which is, let's say it's doing decent, which is 4.75. He still would be able to sell that policy and get $14,042. He could use that on a down payment on a house. He could use that on a down payment. He could use that to purchase a car, or at least be a big down payment on a car to pull his car note down. But the goal is to keep it so that he'll have extra money when he get
right.
But we know life be lifing. So, life might be lifing by the time. And the thing about it is, he's only paid $25 a month, $30 a month for this. That's all he's paid.
Right.
Now, let's say you decide as the mom, hey, he's graduating college, and He's 24. I want to be able to just, at least give him like a couple $1,000 so that he can have to, put a down payment on a car or pay his security deposit in his first month rent on an apartment. You can surrender this cash value policy at that time at the age of 21, and they will give you non-guaranteed $1,400 at the interest rate of 6.57, or they will give you at 4.75 $1,308 or $551. So let's say you get in a bind. Nate, I'm in a bind and my light bill is $500 and I don't have nowhere else to get it. And I might be in a better situation later on.
Mm-hmm.
You can go ahead, cash in the policy, and get $551 if the market is doing crap.
Mm-hmm.
You see what I'm saying? So this is like a savings account.
Right. That's what I was about to say.
Unless you really, really need to go
Have
into
to.
it. The goal is to be retirement for him.
Right.
Or to be a down payment on a house for him. But because life is life and we don't never know when we're going to go into a recession or something going to happen, you're able to make something happen with this policy after having it for 10 years, a decent amount.
Okay.
And that's more than what you have paid
into it.
Well, no, you've paid in 10 years, you would have paid $3,600 into it. At $25 a month, $300 a year.
Okay.
I mean, at $30 a month. So $360 is how much you pay a year. So you take $360, multiply that by 10, that's $3,600. But I also want to point something else out. Remember how I said he would pay for this policy until age 65 and it would start paying him, right?
Right.
Look over here at age 66. And tell me how much he's paying a year. What does that say?
You said age 66.
Yep, age 66 is right here. He's age 66. He's had the policy for 53 years.
53 years.
And
Zero
then
premium.
Correct. So now he still has life insurance. He just ain't paying no money because now they're paying him.
I get it.
You see what I'm saying? And then if you look over here, you go over here to the far end. What is the non-guaranteed assumption death benefit amount? 97. I don't know why.
97,007.
No, 93,700.
I was about to say, wait, no, that's putting 65. 66 is 85, 486.
Correct. So that's what it's doing for him and this is based on the stock market. So he'll always have the death benefit all the way up until it starts paying him. And then he won't have that death benefit on the guaranteed assumption side. We're only looking at the non-guaranteed because we're assuming that the market is going to be doing what it's been doing all of these years.
Mm-hmm.
Now, this is how they came up with this illustration of what the market is doing. Because I like to show you that I'm not just making up numbers. Right here. This is what the market has been doing, and these are the rates that the market has been doing since 2005 all the way to 2024. So you see that the market has been at a good place. The only time that it dropped was in 2011, was the S&P index, but we didn't even invest that policy into the S&P index. What we did was I did the S&P annual par, with 1% bonus. It has not. It's been as high as 10%. 2024 was all the way up to 10%. So the numbers that I'm quoting you is somewhere in the middle. It's not as high as it has been, because what they're doing is they're estimating, giving you a little wiggle room. It could drop, it could go up. If it go up, it's going to raise more. But if it go down, that's why you have the non-guaranteed midpoint, and then you have the guaranteed assumptions. So it's, even though the market, and the good thing about this that's different from a 401k and a regular savings account, if the market crashes, still see that you still have a death benefit over here. Still have a death benefit. So you still have your life insurance. You're just not making no money on the other thing. You won't lose your money. It just won't grow no more. You won't lose whatever you have, because it's not like an annuity or a 401k. It just won't grow until the market comes back.
Now I have a question. Like, real quick, this may be off subject, but on subject. What's the difference in whole life and term life? What's the difference?
The exact part. Term is what? When you think about term, what are you thinking about?
The term of your life?
Nope. A presidential term is 4 years. Term life is for a term. It could be either 10, 20, or 30 years. Whole life is for your whole life.
Okay.
Would you like to see an illustration of whole life?
Yeah.
Let me pick one of my policies that ain't. Hold on, I gotta think, Danny. I'm trying to think which policy I can show you that ain't showing my whole business, because I don't want nobody putting a hit out on me.
Right. Only somebody that it'll be beneficial to.
Correct. Oh, no, before I do that, let me show you this. Let me show you how I invested a little bit more money into my son. You can borrow from a whole life, and you can also borrow from a IUL. You cannot borrow from a term life. You cannot borrow from a term life. All right, so this is Keelan's. And do you see at the top how much I pay a month? It says $200.
$200 monthly.
Do you see what his death benefit is?
$193, $120.
Correct. So that's how much his life insurance is for. So this is what I mean by the more you pay into it, the more you get out of it. So as you can see, for the year, I pay what do I pay for the year? $2,400 a year, right?
Right.
I have my son set up a little bit different. I don't want him to be able to have access to his money into age 70. But do you see how much he's going to get a year? Can you see it? At age 70, he's going to get $175,166 a year.
Oh, you said age 70.
Age 70.
Okay.
Which is $14,597.17 a month.
Okay.
So how I'm able to do that is me and Keelan's dad go half on it. He pay 100, I pay 100
Mm-hmm.
because we decided to invest in his future. But now look over to the purple. Do you see the purple? At age 70, do you see how much his death benefit is? 1.9 million, $362.
I see it.
So that's what I'm saying. It gotta be what you decide to invest. And the reason why I said let's start with a low amount is because in all actuality, here's what really happens. We get in a place financially where we can't afford to um we can't afford to jump around and take money out of the accounts and to do things. And the younger you start the policy,
Mm-hmm.
the better the policy is with $25. But the older they are, the more money you need
You
to
want to
invest
put it
in
in
the
it.
policy. Correct. Correct. The more you want to invest into the policy when they that young. All right, so let me go out and I'm gonna try to pull up an illustration. Y'all gotta bear with me one moment. Let me stop sharing my screen. Your girl gotta find one. I'm gonna find a whole life illustration. May was messing around on this computer and some stuff is missing off of the home screen.
I need to wash my hair so bad.
You and me both. I want to take these braids out and do something with them.
I'm ready to chop it all off again.
Do you?
Mm-hmm. Let me show you. This right here is just 2 years growth. 3. I chopped my hair short like yours is.
Where is my doggone internet? Am I tripping? Because I don't see Outlook. All right, I gotta do this the old-fashioned way. Hold on, because Maine been messing around with this computer trying to get my stuff up and running for me the right way to get it because I put it on my TV so that I can see everything better because I was having a hard time and I feel like he lost it. He lost some of my apps, so just bear with me while I I like how y'all be asking a whole bunch of questions because it just be making me feel like um it be making me feel like it can't get no better than this. Hold on. Like, you know what I mean? This is something like I like the gossip that we be doing, but like this really what I like for real. This really what I like to do for real. Gold digger, no, keep it where it's at. If anything, you need to add an additional policy, but keep it where it's at. Do not move that policy. Do not move it. Do not move it. Keep it where it's at. Do not move it. Keep it where it's at. If is term life more so what most employers offer? Um, depending on the employee, but yes, most insurance that's offered by your. Here's an honest answer. Yes, if your job offers you insurance, it's term life. It's for a term while you employed with them, because they do not have to let you take it when you leave. But if um if they do allow you to take it with them, take it with you when you leave, then you are in a good place. Hold on 1 second. Yes, yes, I'm at home working. What do you need? You need a ride? Oh, I'm still doing it. Give me about 20 minutes. Let me see. Let me see if I can get Bill to come get you. All right, bye. All right, bet. I got one. I got one. Here we go. I got us one. I got us one. So yeah, if you're you need to add another one, a whole life policy. Do not cancel the policy that you already had. Just add you another one. It's called stacking. You are allowed up to 5 policies before they consider it to be money laundering. Okay, so go on and do that. Add you another one. Um, Let me go back. I answered that about the whole life, the one you can borrow from. Okay. Can y'all see this? Can y'all see this? So let's start with the death benefit at the top. Y'all see it's 75,000. And that's the death benefit at the top. And then all right, so I'm gonna make the screen bigger so we can see this. All right, so this person is 34 years old. 75,000 is the amount that they wanted. They pay $1,076 a year for the policy. And this is a guaranteed policy. Is going to be the owl right here on the left. Non-guaranteed is the one on the right. Okay, so you see he's guaranteed 75,000. You see that he's going to pay the same $1,076 a month as long as he got the policy. It does not increase. It remains the same. So the guaranteed is 75,000. But again, this is one of those growing policies. So as long as the market is doing good, do y'all see how the policy has increased? After 3 years, it went up by $145. $145, correct. But after he's had the policy a total of 40 years, it has increased to $98,539. Do y'all see that this policy will carry him into age 100? That is what they mean by whole life. Do you see that the non-guaranteed value is still 75,000? The guaranteed value is still 75,000. The non-guaranteed value is 124, 208. But do y'all also see the cash value? He can surrender this policy and get this amount of money. So this is why y'all see he can surrender this policy. Y'all see how much is going for the cash value of the policy on the guaranteed side. So if he decides at 74 that he got another policy and he want to cash this one in, he can get $40,000 guaranteed. Non-guaranteed, depending on what the market is doing, he can get $55,185. Now let me explain to y'all why people do this. Why they do this. They do this because they have more than one policy. So when your job offers you a policy, yes, take it, especially if it's free. But you still need your own policy, because let's say you retire from that job and that job decides to keep you with your pension, and they also decide to let you keep your life insurance policy. Well, guess what? You come over here and cash this one in to be a part of your retirement fund, put that in the bank and live off of that too. And it's tax free. This is what the wealthy do. They do that because it's tax free. That's how the wealthy stay wealthy. They get them an insurance policy, they hold it for as long as they possibly can. And if they get in a bind and they know that they can't go to the bank and get a loan, they can cash in one of their 5 policies, because you allow 5 before it's considered money laundering. You cash in one of them policies that has gained you some cushion, and you still got 4 left as a death benefit. And you don't got to go to the bank and wait on them to tell you whether or not you can get the loan. This is your savings account right here. And it's tax free. Hold on, let me read these comments. I actually have 2 35-year-old whole life policies. I don't know. You could have 5. I will DM you for additional information. I have 4 grandkids I would love to get policies for. Yes, please do. And let me also add, if y'all got y'all kids on a policy as a rider, you're doing yourself and your children a disservice. You're doing them a disservice, because as a rider, they don't gain any interest on the policy. They do not.
Hmm.
As their own policy, it grows. You could even do a child whole life policy with this company. It grows. It grows. I just have a client. I can't say the name of the company that they worked with, but it start with a P, and it rhymes with the company, the America that we live in. Okay, so if y'all can't figure it out, y'all on your own, because I can't say it because I don't want to be sued. So it starts with a P, and it's in America. Okay.
Hmm.
The mom answered a question wrong on her application. They asked her on the application, did she see a doctor and he recommended that she have any medical treatments in the last 30 days? She answered no, because the medical treatment that he asked her to have was nothing but an ultrasound for her fibroids. So she answered no. She only had the policy for 1 year. You have to have a policy for 2 years before the insurance company, they're going to pay it out, but they're going to investigate your medical history if you haven't had your policy for 2 years. They're going to pay it out, but they're going to investigate. Now, if during their investigation of your medical history, something like that comes up, that you failed to tell them that your doctor requested you did an ultrasound for the fibroids, even if they find nothing was wrong with the fibroids, you still lied on the application. Y'all following me? Still lied on the application. So therefore, they did not pay her death benefit. Even though her death benefit was murder, she got hit by a stray bullet. They did not pay her death benefit. Her kids was on the policy as riders. So what happened? She died. The policy is canceled. Now, they could have converted it over for her children for her, but she lied on the original application. So therefore, her children did not have their own policy. So again, why do our kids need our own policy? Because we trying to set them up for generational wealth where they're not attached to us. They need to have their own. And if you set the policy at a realistic goal, at some point your kids are going to become adults. And you can hand them over the payment. I wouldn't hand them over the policy, but I would hand them over the payment. And I would also say, I'm still the owner of the policy. You just going to pay it every month. And if something happens to me, your spouse or your sibling is your contingent beneficiary. Do y'all know what a contingent beneficiary is? Does anybody in the chat know what a contingent beneficiary is?
A beneficiary put in place?
It is put in place in case you pass before the insured. So she's still the owner of the policy, but her son pays for the policy. I'm going to use me. I'm still the owner of the policy, but Maine pays for the policy every month. I'm his primary beneficiary, and then his sister is his contingent beneficiary. And his other sister is his secondary beneficiary. So 50-50 for me and one sister, and then the other sister is a contingent beneficiary. In case I'm not around, she'll get the other 50%. And they gonna take care of their brother. You understand what I'm saying? But he has an IUL. So he has a retirement fund set up for him. I did that for him when he was 30. I only did his at $100 a month. It ain't gonna give him no whole heap of a lot like it's gonna give Keelan, but it's gonna give him more than what he had. And he's gonna pay $100 a month for the rest of his life. So I also got his life covered. So if he passes, his funeral expenses is covered. But I also got him set up where he gonna get him a monthly benefit at the age of 65 until he leaves.
It makes sense.
Now, let me go back to the comments because somebody asked, could they borrow from a whole life insurance policy? Now, depending on what company you have, you can borrow from a whole life insurance policy, but it does deduct from the value of the policy. So that means if you have 75,000 whole life and you need to take out a loan for 25,000, now you only have 50,000 until you pay that 25,000 back. Does that make sense? So I want y'all to understand. We do a lot of stuff for our children. We go out and spend unnecessary money on tennis shoes to make sure that they keeping up with the Joneses. We pay for video games and all of that stuff. If we can do that, we can take away minimum $25 a month, maximum was what you can afford. The goal is to keep the insurance, not to just get it, is to keep
and
it.
let it lapse, right?
So, right, because if it lapses, you're done for. Now, if it lapses and you call me, we have a certain amount of time frame that we can get it reinstated, but you're gonna have to pay the premiums that it was lapsed for. Now, let me also point out that the goal is to get it and keep it. So don't fool yourself signing up for $100,000 policy, whether it's whole life or no, I ain't even gonna bring term life into this because I'm gonna just be honest. I will sell you term life, but I don't believe in term life. I believe in, if you're gonna take a term life policy, you're better off just taking a $15,000 whole life policy. The average funeral costs $15,000 because what's gonna happen is it may convert over into whole life after the 30 years or the 20 years or the 10 years is up. But think about it like this. If you had it for 20 years and you got it when you was age 30, the price that you would have paid for whole life at the age 30 that you paid for term life, you're not going to be able to afford $250,000 worth of term life insurance at the age 50. How do I know? Let me tell you how I know. So, average companies go up to $150,000 of whole life after age 50. Now, let me also point out something to you. Now you need a medical exam. Anything over $74,000 you need a medical exam for when it comes to whole life. When it comes to term life, you don't need that. Damn it, I signed out. I sure keep signing out.
Mm.
The young lady that said she had her policy for 35 years, if you don't mind, tell me your date of birth and how much you have with one of your policies. And the only reason I asked her that is because she had it for 35 years. Is she still in here?
I can't see the comments.
Gold Digger. You still in here, Gold Digger? I'm just do it this way. I'm gonna just do $250,000. I'm gonna do my age, 06/08/1974.
Oh, my sister birthday June 1st.
Oh, she good people.
Mm-mm. She's a bitch.
Sound to me like you a hater.
We clash. I'm borderline. I'm June 23rd. So I'm Gemini Cancer.
Oh, yes, you are. So yeah, $250,000 is off the table at 50, but 150,000 is on the table. So I can get term life, $150,000 for 44 $44.85. However, I gotta die in 30 years. So I gotta die by the time I'm 80. Does that make
Hmm.
sense? I'm not doing that. I'm not doing that. Now, you still can't see the chat?
Mm-mm.
I got two
Probably because
policies.
I'm on my phone and it took me through the internet.
You got two policies when your daughter was 5 years old and now she's 40. She'll be 40 in September. Okay, how much did you get, Gold Digger? If I want $150,000 at the age of 50, it'll be $290.19 for me
A month?
a month, and I will have to go through underwriting. And if they find something in the underwriting, they find something in the underwriting for her, for me, and I don't qualify for a priority, I might qualify for a specialty in a policy. And with the specialty policy, uh, 84. With the specialty policy, it'll be 390.
Hmm.
So if she wanted to do 130,000, I mean 100,000 at the age of 40, it'll be $130.55. But this is a growing policy, so it's gonna grow like that one that I showed y'all on the screen. It's gonna grow like that. So, but if you wanted to do 50 for her, with no health issues, it'll be $76.56 a month. Now, are you paying? Would you have a whole life? You're not paying more than that. You probably paying pennies on the dollars. Do you mind if I ask you how much you're paying? Hey, Bobby. So you said your son was how old? 13?
Yeah.
Now let's say you're not in a position to be able to do a IUL for him right now, okay? So 13, he was born in 2012.
Mm-hmm.
Birthday is 12.
No, February 3rd, 2312.
I don't know how I forgot that he got my dad's birthday. Girl, I hope your baby don't be crazy.
He
I
laid
told
back
him,
right now.
How much you think he weighed?
134, I believe.
You say about 5'6"?
I'm 5'8". Yep, he about 5'6". Yep.
All right. It would be for 50,000 for him. It will be $36.58 a month for $50,000 worth of life insurance for him.
That's not bad.
Not at all. And that's whole life. So that price would be his price for his whole life. It will not increase. His policy will grow just like that one grows.
That's not bad.
Not at all. And after you had it for some time, if you got more than one, you can cash it in for the cash value and do something nice with it when he graduate college. Cash it in, do something nice with it.
That's not
And
bad.
it's tax free. And you don't got to take a loan out to get him a car.
If I knew this when my oldest son was going through it.
How old is your oldest son?
He 19. 18th birthday, I gave him $5,000 cash.
19, so that means he was born in what,
2005.
2005. His will be $46.29 a month for 50,000.
That's not bad either.
No, not at all. Not at all. Now, if you want to break it down, tell me how much you think is a reasonable amount for you to spend on your son a month on the 19-year-old.
Well, it's 3 of them. So I mean, maybe $100 out of my account. It's 3 of them. I have 19, 13, and 2.
So let's divide 100 divided by 3 is $33 a piece. So we're gonna go with $33 a piece. For $33 a piece for the 19-year-old, you can get him $35,646 worth of life insurance.
That's not bad, Let. That's not bad at all.
For the 13-year-old, you can get him $45,012.
And then the 2-year-old, she was born in 2022.
What's her birthday? What year is she born?
2022. 7/28/2022. My allergies is going crazy.
What'd you take it for?
Nothing. It's just really my eyes, though.
You say she weigh about 60 pounds?
She ain't that big. She weigh about 30 pounds. She tall.
She about 2 feet tall already?
Yep.
I gotta play with her height, honey.
But you remember what you were saying about the question on the policy?
Hmm.
Uh, my ex-husband, his brother passed away. His mother had an insurance policy for his brother. And one of the questions on the policy was, has he ever been convicted of a felon? I think at the time she put no, and he was killed. And we had to find a lawyer and all of that to eventually get her the money because they basically said she lied on the application.
Had he been convicted, and he had been convicted of felony?
Mm-hmm.
Yeah, that's one thing about it. You don't want to lie on the application. Let me ask you this: how long had it been since before he? I need to
No,
convert
she
into.
she had the policy for years. She had the policy for years. When she first started working at the college, she had the policy for years.
Wow, that's crazy.
She eventually got the money. She eventually got it, but it was a process.
That's crazy. Hold on. I had to actually log into that actual insurance company because it wasn't letting me give you a quote on that one. That's crazy. I pay very little for each one. I pay very little for each one. It's right. Less than $25 a month for the 50K and 129 every 3 months for the 100K. Right, because of how long you had it. Right, because of how long you had it. So, and that's another thing. I'm glad you brought about the 3 months. You know, you can pay for a policy annually, semi-annually, and quarterly or monthly. So I tell people when you get ready to get your income taxes,
Pay it off for the year.
pay it off for the year. Because if not, you're gonna do something else with it, right?
Mm-hmm.
Something that you really don't have no reason to be doing that. You're just doing it because, like, we get a little bit of money in our pocket and we want to do ball hit a whole shit.
Mm-hmm.
I'll be keeping it real. We want to do crazy stuff like me. I got a little bit of money in my pocket. I took my ass out the country, but I did pay my bills before I left.
That's
I
that's
did, I did,
that's what matters first.
but I ain't want to. I ain't want to. I'm gonna keep it all the way real. I did not want to. I did not want to. I think $25 is a lot for $50,000 at the age of 5. That's a lot. That's a whole lot. I mean, and that's just like I have some clients that I can actually tell you one client right here. What is this number page? This little girl right here pays 20 $11 and 87 cents a month. for $50,000.
Pop, what's that hanging?
It will not let me quote the baby for some reason. It won't let me quote her, and I don't know why. Hold on, let me see. And you said her birthday was July 28th?
Yeah, 2022.
And I heard about some states not even allowing you to she can get a child's whole life policy for $6.41 for 15,000. So let's do $33. $11.83 is how much she can get for $30,000. And
That's
it's
not
a
even
child's
bad.
life. Correct. It's a child's whole life, which when she turns 18 will convert over into adult whole life. So it's not bad at all.
That's not bad at
So
all.
when people don't be having life insurance on their children, I be so confused. If is it because they can't afford it, or is it because they don't understand it, or is it because that they don't believe that it could happen to them? And I'm asking you, I'm asking you, what are your reasons for not having it this as of yet? If you don't mind me asking on the live, if not, I can ask you later. Why haven't you gotten it? Do you have it through your job?
Well, no, I have it through my job. But I also have like their riders on my
On your policy.
right.
Correct. So you have it through your job, and then they be riders on your policy.
Right.
And that is the common thing for our community, is putting them as riders on the policy. And really, you're not doing them a favor. You know who you're doing a favor? The agent. You're doing the agent a favor, because he's getting commission off of your premium. So why not add riders on there?
But when you don't know.
Correct. That's why I be doing this so many times. Like, I'm gonna do this until and like I always give people an option. You don't gotta work with me. I could refer you to somebody that's gonna do you, you know what I'm saying? That is gonna do you. I don't give a flying F who you work with. Just work with somebody. Don't give me that I got insurance through my job, because your job is not gonna really, if you fire, you lose your benefits, right?
Right.
They're not gonna be like, oh, we fired her, but we're gonna keep her insured. They're not doing that.
That makes sense.
Yep, $15.92 a month for 35. Yeah, see that right there is more like it. $15.92 for 50K and 21. Yeah, that's more like it. That's more like it. 18. So I tell you what, if you got some time this evening, I can give you a personal quote. Go there. I gotta go get my son from work in a minute. I should have been gone, but I be like, you can call your friends for everything else. Why you couldn't call your friends for rides? Yep. So yeah, I think that we should get together, Danny. I gotta make sure I'm licensed in Jersey because I let a lot of my licensing go. But if I'm not, then one of my agents is. So I got
Okay.
4 agents that work up under me. They just don't be like to have a social media presence, but I got
Mm-hmm.
4 people to work with. I can make sure you straight.
Okay.
And it don't matter about the commission because I get commission off of whatever they sell.
Okay.
Yes, getting your own policy outside of work is important.
Yes, baby.
And making sure that your kids have their own policy is important. Even if you got to reduce the amount of your policy down to affordable, let's say that I got a client that spends $200 a month on everybody's policy, herself, her husband, and her 5 kids. But granted, she did get this policy very early on, but she has herself, her husband, and her 5 kids on this policy. They only spend $200 a month. That's $100 a piece between her and the husband. That's not bad. And they don't have $1 million policies. They have enough to cover their burial and for them to at least be off work for 30 days. Because here's the thing, the way it's designed with your job insurance should pay for the funeral.
Mm-hmm.
If you're still employed, your policy should pay for your time off because you only get a certain amount of bereavement
days. Yep.
And that says, okay, you buried your mama, you buried your daddy, you buried your kid, you buried your husband. We're gonna give you 5 days to get your affairs in order and then get your ass back in here.
Back to work.
And,
Mm-hmm.
and finish doing business with us. Because we need you to keep making us grow. And we really don't care about your mental health. But if you already have your mental health put together, you ain't gotta worry about that. You already have your own policy. You can take as many days as you want. And if you don't want to, so if I were to pass away, my kids get $25,000 a piece after that. I think that $25,000 is enough for them to take a couple of months off because I know that none of my kids make $25,000 a month. So what I did was I found out how much each one of my kids make on a monthly basis. I did that and multiplied that by 3 months, and I said, this is how much I need my policy to be because I need my kids to at least have to take 3 months off, to take a leave of absence for 3 months to get their mental health together because I know how close we are and how important our relationship is. I don't want them to be feeling like they gotta bury me and get back to work.
All right, now you got Debo over there signing stuff now. Don't leave him out.
Debo, hello, absent. Debo got to get himself together because I'm getting ready to go get his brother from work. I'm debating on if I'm going to save this live.
Save it.
Or if I'm going to not save it and probably do this for an hour on Saturdays.
Save it and let it do the numbers for you because it can touch people that wouldn't be in the live. So save it.
All right, I guess I'll save it. Well, you guys, I'm going to end this live now because I have to go and be a mom. I'm taking off my insurance hat and becoming a mom right now. And my son is. I feel like he Apple paying me to death. He's sending me money on Apple Pay and like send it back. Why am I sending it back? Is you gonna get my Apple Pay locked?
Sound like my son just now.
Yeah. Yes, watch the playback. It has a lot of information, but you guys, my inbox, you can reach out to me in my Instagram inbox at any time, and I do not this I love this. I love this more than I love the drama. I love making sure that we know what we are entitled to.
Right,
This right here
educating
is
people, because a
our
lot of
40
people don't
acres.
know.
Yes, this is our 40 acres and a mule. And a lot of people think that life insurance is just to bury you. That's what they think. Life insurance is just to bury me. No, it's bigger than burying you. It's securing your children's future. It's making sure that your kids have something to do in a spirit, in the event that you leave them, that they ain't got to just be scrambling trying to figure it out. This is you leaving your kids with an opportunity to sit back and properly mourn you, or for you, Lord forbid, to properly mourn your child so that you don't have to go to work and affect everybody at the job with your mental health.
Mm-hmm.
Because you don't never know what somebody else is going through or what somebody's going through. And because I got into this business because I really got tired of hearing about people passing away and
having fish fries
or GoFundMe's.
Mm-hmm.
That right there, that breaks my heart for our community. And when I say our community, I'm not talking about race. I'm talking about financially. We all in one community financially. Unless you is six figures, we in the same community, baby.
Mm-hmm.
We might just have different coats of skin, but we all in the same community. But
unless you're the Kardashians.
Yeah, correct. And don't be looking for no celebrity to feel sorry for you and be like, let me help him. No, they might not do it. Some of those people, not everybody that lucky. But everybody, y'all have an amazing night. I am going to save the live. I appreciate y'all for showing up. That person's stuff that is on this live, that is a false person. I just made it up. There's nobody that, plus there's no HIPAA information on there. It's made up. It's just an illustration. It doesn't represent anybody. All my information is on there because I'm the agent. But that's about it.
All right. Save it.
I will.
And call me.
You're very welcome. I will call you.
All right.
And we'll sit down. Let me look and see what states I can. And I'm thinking about eliminating more in June, to be honest, because my renewal is coming up in June. And I got to do all of this testing for this renewal. And every time I think about the testing, I be like, man, I only really work in Florida, Louisiana, California, Ohio, Georgia, and Texas. Like, I don't really, and now Iowa and Michigan. But, like, you don't ever have to renew your Florida. You don't ever have to renew your California, your Michigan. But I have to pay renewal fees for each state, which I don't mind paying the renewal fees, but I'm not going to keep paying renewal fees and I don't have clients there.
Right. That makes sense.
Yeah. I do California policies. Yes, ma'am. I have to keep California. That is my home state. That is where my mama is. I manage her health care. I do her Medicare and I do her life insurance. I have to keep California. So that one I'm going to be paying. I might be cussing, but I'm going to be paying. Because I'll be damned if I let somebody else tell my mama what she can and cannot get. Not happening. Not my mama. But y'all have an amazing weekend. And I might go live with Raunchy Ghetto-ness in a little bit on Instagram.
Okay.
Now that I am, what is it called? Monetized.
Oh, nice.
Yeah, my reels is monetized, and I didn't even know it until somebody sent me something on the reel, and I was like, "What? What is this?"
Mine's are as well, but I don't do a lot of posting. My Facebook is as well.
I don't really be on Facebook ever. I don't know if Instagram is monetized or not yet, but
all you have to do is go on your dashboard. Go to your home page and go on your dashboard, professional dashboard. If you've got the professional dashboard, then you can look all of that up.
On what, YouTube?
Oh, if your YouTube is monetized. No, I was talking about Instagram.
Oh yeah, I already know. Yeah, it's professional. It's monetized. I didn't know it was monetized until somebody sent me something. But somebody told me YouTube was monetized too, but I don't know if it's monetized or not. I don't
Yeah,
know
I
how.
think you have to get a certain amount of watch hours before they monetize you. So
Yeah,
by
I don't.
doing this you said every Saturday in your brick house lives and stuff, by constantly doing it, it get the watch hours. I think you got to get 10,000 watch hours or something like that.
Oh, so somebody told me that I had to have 1,000 subscribers for people to send me gifts. Which I don't know nothing about that. I don't be doing it for the gifts. If I get the gifts, I appreciate them, but I don't be doing it for the gifts. Um, but I have had 17,000.2 views,
Oh yeah,
but
you should be monetized
I
now because
don't
I think
have
it's
I don't have I only have 1.1 followers. So I don't know how that works.
I think you just look in the settings, but the views is what they go off of. It's not like I noticed even on social on Instagram, it's not the following base, it's the views that you get on your like your monthly views, I believe it is.
Oh yeah, I don't know. I don't know. I got 1,156 followers. I have had 2.8 likes, 163 shares, and 363 comments. But I have 4,000 views in the last 7 days.
That's good.
I don't know. I guess it's good, but I be
That's
busy.
why I'm telling you to save the live. That way, when you're not, even though you're not live, people can still go back. It's valuable information for a lot of people, and then they can still go back and watch it, and the views can get up like that.
Yeah, I probably will leave it up there.
Not probably.
I'm gonna leave it up there, but yeah, I'm trying to separate it. I'm trying to separate the ghetto from business again. Not that I, uh, not that it reflects my, not that it reflects my. It doesn't affect my business at all. At all, it doesn't affect my business. But what it does is, it affects me. Cause I be like,
Mentally.
yeah, I don't feel like going live because I know they don't get on here and ask me about this when I'm trying to talk. So I'm trying. I got to figure out how to separate the YouTube from, like, that's why I'm doing days. Like, you know what I'm saying? Saturdays is gonna be insurance days, and then Thursdays is gonna be brick house days. So we gonna see.
Right. But even if, let's say somebody just scrolling through, right? I think
Mhm.
is, if I'm not mistaken, don't quote me, but I think it's 6 seconds. A view is a view. 6 seconds, you still get the view.
Right, right. I mean, I'm not doing bad on the views, but I'm gonna call you because I gotta get my baby because he
All
just
right.
texted again and he
Okay.
feels like I'm. I mean, but it's like 80 degrees outside. He could chill. But y'all have an amazing, amazing weekend, and I'm gonna holler at y'all later on. I'm gonna go live. You can do a
All
second
right.
shift. I think I will.